This is episode 601 of the Rio Grande Foundation's Tipping Point, New Mexico. I'm Paul Gessing, president of the Rio Grande Foundation, New Mexico's free market think tank. You can find out more about the foundation at riograndefoundation.org. I'm very pleased to be joined this week by Reilly White. He is associate professor of economics at the Anderson School of Management. And anything I missed there, but you're a regular return guest here at Tipping Point, New Mexico. You've got a lot of background there, though, Reilly. I don't want to miss anything.
That's fair. No, associate professor of finance. That's the only thing.
Finance, okay.
That's in the Anderson School. But we do. I'm also associate dean. We've got a whole bunch of other things going on right now that are very exciting. But it is a joy to be here. Thank you so much for having me, Paul.
Yeah, and I appreciate your coming back on and sharing, a little bit about your perspective on some of the big issues that we're dealing with economically. So we will be talking economic policy with Reilly, and somebody who I think it's safe to say in higher education is more moderate than a lot of the folks who we often see, and just a lot going on in higher education these days. Thankfully, you don't teach in the Ivy League, though. There's a lot of controversy back east right now. But I want to talk about electricity in New Mexico first and foremost. And you were quoted and seemed to be a regular for the Albuquerque Journal's reporters on electricity issues. And of course, New Mexico is very much in the midst of this energy transition. We survived last summer. There were no rolling blackouts. PNM's merger fell through. And, we're still, I believe it or not, I was in Roswell last night and drove back at night. And if you do that drive from Albuquerque, you see just hundreds and hundreds and hundreds of windmills. And that's all very recent news. So talk about what's going on in our electricity world here in New Mexico right now, kind of the 50,000-foot view.
Right. That's a great observation, Paul, too. And yeah, I make drives to the southeast part of the state often, going through Corona, going through other places. You see, just this assortment of new build, things like wind farm, wind energy. The towers are everywhere now, and it's fascinating to see. And so in New Mexico, we have this very interesting, we're at this very interesting juncture involving our renewable standards that we've set forth. And, looking at it this way, the first, 50,000-foot view estimate is we've set certain targets for our energy producers to produce with certain clean energy, carbon-free emissions over the next few years. In particular, those targets, we're expecting, right now, a minimum of 20% renewable energy, 40% by 2025, 50 by 2030, 80% by 2040, and 100% carbon-free electricity in 2045. And kind of giving that sense of these things. And usually we look at what's renewable, what's carbon, what's considered carbon free. Renewable energy sources are things like solar, they're things like wind, geothermal, biomass, bio waste, some of the smaller hydroelectric. And then on top of that, we have what's called carbon free stuff, and that's nuclear and large hydroelectric plants and stuff. And so this is a big deal. Now in New Mexico as a whole, that has not been our traditional energy allotment. And it involves, to get there and to make that arrangement, to make that transition, our utility companies have to embark upon a very strategic and very intense level of investment to get us to that point. And that's a very interesting thing. And I want to also back up a little bit and talk about, hey, we have utilities in this state. As it turns out, about 3/4 of New Mexico households are served by one of three big electric utility companies, and that's PNM, that's El Paso Electric, and that's Southwestern Public Service Company, which is actually a subsidiary of Excel. And so these three companies are investor-owned utilities. That means that they're publicly traded, in some capacity they're owned by investors, or their parent company is owned by investors. And so they have stock, and it trades on the marketplace, and it goes up and down. But utilities are a really fascinating industry to be in. And they're so fascinating that when we do economics and finance research, we actually toss them out because they behave in odd ways. They're highly regulated. They are monopolies in the regions that they serve. And that's a fascinating aspect to them. Normally in finance economics, we love we look to free markets as sort of a way to sort resources in a very efficient manner. To have free markets, you need a lot of buyers and a lot of sellers. You need both of those things. In energy, in particular, because of the nature of running transmission lines, and it's very impractical to have 30 different energy companies at one time, from the infrastructure standpoint, compete for your business as the consumer. It would be like running 30, electrical wires outside of a house here and saying, "Oh, good, I'll just pick this one," and it becomes very tedious. And so decades ago, it was established that the most efficient way of this is to grant sort of this monopoly stamp of a utility company over an area. But in response to that, if you do maintain that, you have to regulate them heavily. To make sure that they don't take advantages of those costs. And so that's kind of that give and take between why the industry looks the way it does. But it's also a very challenging environment to be in. And so when you think about investors, if you want to invest in stocks and bonds and portfolios, you look to a utility company and you're like, well, this is very interesting. You have a capped upside. No matter how well a company was managed or how good it performed or how much money that it made, at the end of the day, the regulatory body that governs it in whatever states that it was located in would ensure that profit margins were low, and it becomes a very tricky valuation standard from other aspects. On the other hand, why people like investing in stuff like utilities is because it is pretty reliable in downturns, in economic downsides and recessions, because people don't shut off their lights when the economy is doing badly. It's considered essential, and so a lot of times these energy companies keep making money, or they're able to make money in ways that make people happy. But it's always an uncomfortable relationship, because on one hand you've got a regulatory body that often oversees and helps decide, what's merited and what's not merited on as a rate increase, for instance, for a utility company, and then you have the utility company itself, which is ultimately trying to maintain a profitable standard, trying to produce energy that's effective and efficient, and also garnering the capital necessary to meet whatever energy goals that it needs to do. So you've got this really interesting. It is a fascinating industry to be in, and in New Mexico, we have this very fascinating and amazing, utilities infrastructure that is evolving as it stands right now.
So there are states where they have attempted some form of deregulation, Texas being one of those states. But as you say, it's not like five different utility companies are all running their different five wires. The infrastructure is still the same. They may have some different ways in which they generate or manage their business, generate the electricity, manage the business, etc. And it is more deregulated, I think, than New Mexico. But your point is well taken. And obviously, from our perspective here, the thing we've talked about most extensively is the law that's set in motion this shift towards so-called renewable or zero carbon electricity generation, the Energy Transition Act of 2019. And you were quoted in an article, and I saw it for our blog, Heirs of Enchantment, March 25th, 2024. My post says, New Mexico costly energy regulations beginning to hit home. And your quotes to the Journal were, how can electricity companies afford to pay for new renewable energy facilities or acquire the clean energy? And the solution you set out will be price increases and mergers. Now, before we get to the mergers aspect of that, all those wind farms and whatnot, shuttering a coal-fired power plant, they cost money, but the people who sold us this energy transition in 2019 claim that we're going to see lower electricity rates. We're going to see all of this and more for free. This energy transition is not just going to not cost us money; it's going to save us money. It seems like you may have a different perspective there, and I want to give you an opportunity to share your perspective on where this is all going for ratepayers, especially.
That's a great question, Paul, and that's absolutely right. So this is really interesting. So, looking at it this way, and I want to also espouse, this is not an anti-clean energy approach or standpoint. It is sort of a we look at the evolution of markets, we look at the evolution of how things go across, and I think that it's essential. And when the writing is very much on the wall, that renewable energy is very much the future. But transitions to any aspect of transitions are themselves costly in their definition. They're costly in labor, they're costly in resources, and they're costly in the adaptation of you go from one paradigm to another paradigm. All that stuff costs something, and that's really something to think about. So looking at this in the whole, and I want to also compliment, of course, the workers of PNM out there, if they are part of the podcast. They've been doing some very heroic work to get PNM up to a level where now, despite all everything that's happening, looking ahead to a merger with a company that had a lot of renewable energy expertise, that merger being denied, and then still achieving enough in meeting the standards required at the state level is no small task. It requires substantial amounts of investment. Investment is costly. In 2019, rates were lower than they are today. Running projections forward and looking at the estimated cost of, say, building infrastructure, building new projects, financing was itself cheaper.
So
Nowadays,
rates of interest. You're not talking
no,
about utility rates.
I'm talking about the whole thing. I'm talking about rates of interest. Exactly. So if I'm
Okay.
if I'm a company and I got to go out and I got to build something that's big, vast, and new, like a new wind farm, I'm building new solar array, something else. All of that's capital. It's millions. It can be billions of dollars of capital.
Right.
That has to be spent, and it has to be lent. It has to be provided. All of that is a cost to it. And so, in one of the things that and this is that balance, of course, where the regulation comes in. Whenever we change something and we say, okay, so if I have, I know that the transition is going forward, but I feel like the transition is not happening fast enough. So I want to encourage companies to, for instance, adopt to renewables in a quicker fashion. They're going to have to do that. They're going to have to retire facilities that might be otherwise functional and then rebuild new facilities for that. And all of that has costs associated with it. And then you're going to come up along the question of, what is the generation cost of these things? Now, in the whole, thinking about the United States as it stands right now, solar and wind are some of the cheapest forms of energy to create. But to get there into that point, and where I think that 2019 sold us on in the transition, was that in years ahead, decades ahead, when we have these facilities, they're out there, they're producing energy. The marginal cost that's there is actually lower than expected. So it's a good long-term hike. In the intermediary, though, you're asking utility firms in particular to take on a great deal of cost in transitioning us forward. In building infrastructure, all of that is cost now, and that cost has to be paid for. And PNM, of course, has been able to make it work. Other utility companies make it work, and that's through some very heroic labors to make that happen. But looking as a whole, we expect, there's a lot of questions that raise the cost of these electricity elements. You need lithium battery storage. You need other storage to provide functionality for power generation on cloudy days and days when it's not windy. All of that adds additional costs associated with it. So all of the infrastructure that is being built right now is helpful, and it will continue to be built, but it all has costs. Costs leave us with one of two options going forward, right? So they're going to come in and say, look, I'm building billions of dollars of new things, new infrastructure as a utility company in general. And they're going to go to the rate board and say, is there an avenue by which, this can pass through to consumers? And this is always that juncture, right? So if they, sorry about that.
Okay.
One of the things, I have a giant moving head, and sometimes, one of the and so this is a really challenging dialogue to have, because New Mexico energy costs are not the highest in the country by any means, and if we look across a number of different mechanisms, they are reasonable for our relative size and our relative income. But you're going to run into these price pressures, right? You're building, you're advancing, you're making a transition. All of those costs come out somewhere. Now, how it hits the bottom line of PNM in future years is unknown. What it looks like, the balance sheet looks like in 10 years and 15 years. PNM has good projections, and I know they're going to be in a position to handle it. But they're going to continually be looking for other opportunities, like the Avant Grid merger, other mergers that might cross state lines. And in that sense, you're making it hard. It's harder to do these types of investments when you have a utility company that is not very expansive in size. So if you're a very large national provider of electricity, you have access to national capital. PNM has it's not by any means I think it punches above its weight, but it doesn't have access to the types of capital larger companies do, the types of expertise larger companies do. And so it's going to also be finding places and channels where it can potentially merge to reach some of these guidelines. And then at the same time, this is this is the hard part. Will it be able to do so in the time frame that's allotted? Will it be able to produce this? Will we have answers to a lot of our clean energy technology questions by 2045? And a lot of these questions remain unknown, and they have to be addressed at some point.
Okay, so you said a lot there, and the first thing you said was about rates. Now,
Yes.
interest rates are definitely up. Are you saying that utility rates are up? The price that we pay for electricity are up as well?
Now that's a really good question. No, actually, the thing with the rate boards are is that that's a really good question. I'm focusing on so interest rates. It is harder now. It's more expensive to build out infrastructure than it was a few years back, just because by default that rates are higher. Interest
Okay.
rates are.
Yeah,
So if I
absolutely.
take on billions of dollars of debt, those higher interest rates that flows through to my bottom line, and as a
Sure.
company, I have to pay for this. So it's something that it is a more challenging environment from that
But
perspective.
electricity rates haven't gone up in recent years.
Right. They well not to the levels that we've seen. And I don't have the numbers in front of
Okay,
me. That's a really good question, Paul. I'd
that's
have to
fair.
see what it looked like that way. I was looking at a lot of national where we fit nationally in standards, where we
Yeah.
fit in other
I
places.
I
Yep.
think they've gone up, but not dramatically and
That's
not
right.
so far. But it
That's right.
sounds
Well,
like you're saying
rate
that
hearings. Yeah.
it
That's
could this
yeah.
could be happening in the not too distant future. A
Oh,
combination of
right.
rate as in utility rates or another merger or purchasing partner for PNM
Yes.
as a means of making this transition. I just want
Yes.
to put a fine point on everything and
Yeah.
clarify all that. So what we're talking about on one hand is generation. We're talking about the windmills that we were talking about earlier, the solar
Yes.
panels, and notably the battery power that is going to be required because we all know the wind doesn't always blow, the sun doesn't always shine. Uh, there's a lot of competition out there for battery resources.
Mhm.
Are those batteries? Are we able to get enough of them at a reasonable cost? I know this
Yep.
is a very specific question, but
Yes. Yes.
there's a
Yes.
lot of
It's a
competition out
geopolitical
there.
question. Exactly
Yeah,
right.
it's a
Right.
big one.
Gosh, and it's fun that you said that too, because this is an active discussion. I had a conference in Taiwan in October and another one in Japan in March, and thinking about this worldwide, the question of where do we get supplies for things like lithium is of course an important one. I think we'll get there. I think we've had some new lithium discoveries that of course have put a lot of the global markets at ease regarding some of these prices. But to your point, and there's a lot of moving pieces in this industry. The infrastructure levels we need, that capacity, there's a cost for everything in any economy. And so as costs increase or as costs go up, then we hopefully find better technologies and better ways of extracting those things to realize better benefits and make extraction of lithium and other stuff that we need profitable. But at the same time, I think we will have enough resources. I think we're going to be highly competitive in resources. And I think there's a lot of uncertainties, especially as we're seeing a lot of infrastructure build out worldwide along the question of renewable energy, where those resources come from and what people are willing to pay for those resources. And back to your initial point, too, and I think that was a great clarification. Looking at this, rate hearings are ultimately an arbiter of where an electric company like PNM, for instance, might come in and say, here's what we think a fair rate should be, and then the board comes and they say, well, here's what we think a fair rate should be, and then it becomes this very active and back and forth discussion between the two parties, and with the idea in mind that cost increases happen at a rate that New Mexicans can handle. It is hard though when you push against all of these things, and that's the big picture. When you say build out plus battery plus all of this other stuff for utility firms, and there has to be an avenue of growth for them that allows them to recognize value on the investments that they're making. And if they don't, they become unprofitable. And then that's another weird situation of an investor owned utility company in a space that can't make money for investors and can't generate power that can supply homes. And I'm not saying that we're anywhere near that. Actually, I don't think we're near that apocalypse. But these are the avenues that we go down if this isn't thought about strategically. And I think that will, in the next 20 years or so, we will see, because of these investments, probably a steady increase in costs, followed by, once we get through the transition period, and this is something that we're able to generate. And this is a this is a pie in the sky, but I don't know a lot about. On my side, we look at the economics and finance of situations. I look at a company's balance sheet, for instance. I can extract a lot of knowledge from it, and I think some of the listeners are much more technologically inclined, and they might have better intuition as to this. But what does a 100% renewable economy look like in New Mexico with regards to being able to produce energy reliably, adequate battery storage, and adequate infrastructure? And then, what does it look like to replace that infrastructure when it becomes obsolete? There's a lot of things out there right now that we're thinking about, Paul. This is going to be a big thing for us to grapple with here, for everybody in the next 20 years.
Yeah, and you mentioned rate board. It's
Mm,
worth noting that the rate board in New Mexico is the Public Regulation Commission,
yes.
and we had a
Sorry.
massive change in that area recently. In recent years, where it used to be an elected five-member body with districts across the state, which now is a three-member body put there by the governor. So. Uh, just a political thing that could have some varied level of impact depending on who's nominating these people and what their own ideologies are. So another thing, though, we talked about those utility wires and the costs of
Hmm.
stringing those wires around and maintaining them and all the things that go into that. Uh, that's going to be and is another expensive proposition. It's not just about the generation source, but because wind and solar in
Yes.
particular are so dispersed, we're having to invest tens of millions, hundreds of millions of dollars in reworking our power line structure. Anything to share about that
Oh,
specific
yes.
aspect?
And that's absolutely true, Paul. We're a state of 121,500 square miles, 2.2 million people. And that is, we're the fifth biggest state. With this giant landmass, to string wires across the state is just a daunting infrastructure problem that faces New Mexican utilities uniquely in a worse way than I think exist in many other more dense states where population centers can help with economies of scale in meaningful ways. And so that's absolutely true. I think that's a huge factor in this. That infrastructure costs and bringing it to areas that don't typically, we're generating it. So, you might envision an area decades ago where you generated electricity close to major cities. Now, to Paul's point, electricity is being generated. Solar is being generated sometimes close to major cities, but you've got wind farm, and where the most wind energy is in New Mexico is across the eastern half of the state, and again towards the Arizona border on the western half. And so you've got this, to somehow transport this power into something like the Rio Grande Valley, which itself is a daunting task. And these lines have to be maintained, and they have to be kept up to speed, and the infrastructure has to be continually maintained. And that's another costly thing as well.
Right. And, in the Albuquerque Journal article that I referenced earlier, you do you do say that the utilities will push harder for price increases in the next decade or more. So
Yes.
there is going to be a reckoning in terms of our
Right.
pay for the electricity we generate and use going up, and
Yeah.
that's not
Oh,
some
yeah.
there's no free lunch there.
Yeah, no, exactly right. And so some of this came too because the New Mexico Supreme Court came down with this decision around what's called renewable energy certificates. And renewable energy certificates are basically proof that electricity has been generated from renewable energy sources. Things like wind, solar, biomass, hydroelectric power. And so these little RECs, so renewable energy certificates, are tradable, and they're separate from the physical electricity itself. And in this rate decision, they came down, and what happened was is I think it was the Southwestern Public Service Company came up and they said, hey, we have already generated a whole bunch of these RECs from other stuff that we've done in the past. And this has, and we've banked them. So they've got this on their, they've got a whole list of all the renewable energy that they've been able to generate from some capacity in the past. And they wondered and said, hey, if we retire these now, can we get that, rate rider? Can we increase rates because we've demonstrated that we've exceeded the state expectation for renewable energy, and therefore we've qualified for this new thing. And the Supreme Court was like, nope, it doesn't represent real electricity generation, and as a consequence, kicked it out. And that was another avenue that utility companies may have chosen to explore, banked RECs to generate rate increases as incentives established by the state of New Mexico. So that door is closed. And so while RECs are still very much part of the equation in doing this, the definition of what constitutes achieving these energy goals got, a little bit narrower. And that's what's also leading to the question of will this increase prices as the time goes down the line?
Now, obviously, this transition needs to go smoothly in terms of always having enough electricity for people to use on a daily basis. The peak time in New Mexico is the summertime,
Yes.
and we there were concerns, and PNM has expressed concerns. The battery issue, you know, you express some level of confidence, but it seems that that is going to be a fraught challenge to just have enough battery backup available to make sure that the lights always stay on. I mean, these battery packs cannot be cheap. And where are they deploying them nowadays? Do you have any idea,
Oh
like,
gosh.
where these facilities? Because you see,
Yeah.
it's easy to see a wind turbine.
Yeah.
We also know that there's a solar field going in right off I-25 between Los Lunas and Belen. And solar panels do also, they take up a lot of space, but the battery packs are relatively small, at least as they currently stand. Do we know how successfully they are deploying these? Because it seems like when that rubber hits the road and when we really ramp up the energy transition, those battery packs are going to be the basis of our power source, and having enough of them for, heaven forbid, 2 or 3 days of cloudy, cold weather in New Mexico seems like a really fraught proposition.
So the name of the game is energy abundance, and that is what I think policymakers, what everyone, I think, we need to embrace the question of energy abundance, particularly in the sense that, because so many renewable energy sources exist, looking to a situation where we can produce a giant amount of energy that is consistent and meets our needs is going to be crucial for every element of economic success and development this century. And we've got to figure out a way to make that happen. Now, this is something I mean, and I don't know enough. Now, I know a lot about the utility stern. I can talk about utility companies, the batteries, where batteries might be located. That's a separate issue. And I know that many, we have some really outstanding folks I know at PNM that could provide some greater and more detailed information about that. But in the manufacturing and doing this, looking at batteries themselves, they require, as Paul points out, a lot of different resources, a lot of different things that often are globally sourced that don't come from local areas. That then becomes a question of availability. A lot of our, looking back 2 years ago, we had a deep and existential fear of lithium in particular, being and running out in supply. And that kind of freaked out the commodity markets a bit, among many other things it was dwarfed by many of the other things that the commodity markets were concerned about a couple of years back. But in this particular case, one thing that's that we found is that there is a great deal of energy right now going into finding resources, finding where these resources are located, how they can be extracted, and a great pressure, I think, to find that within the United States to avoid sort of geopolitical conflicts. And we're making some headway in this. I know a couple of big lithium finds recently have helped out a lot. But to your point, Paul. It's we got to make the batteries. You have to deploy the batteries. You've got to get them in such a way where their capacity can meet worst case scenarios for energy consumption in New Mexico. Where production just can't possibly meet what we're actually consuming without a detrimental effect on New Mexicans. And that is going to be a sublime challenge for us to meet in the next few decades.
Yeah, I mean, obviously, there's a lot. I'm sure that if and when somebody is able to come up with an alternative to lithium, I mean, there are storage alternatives. One of them is to pump water up a hill and then let it drain down and run the turbines that way. Of course, we're not exactly a water
I would
rich
not.
state.
I feel like that wouldn't get particularly far, Paul, in that approach. We got Paul's got a great plan for
No,
running
no, no.
turbines.
It's it's a plan I've read about and listened to people talk about as a potential for essentially storing electricity when you're not using it in a way that maybe works in Washington State
Right.
but won't work in New Mexico. And I mean, obviously they have a lot of hydro, but what I really want to talk about is that one of the things that is going to be added into that mix is by 2 years from now, our governor has dictated, for lack of a better word, that 43% of the vehicles sold in New Mexico are electric vehicles. Uh, Martin Heinrich is pushing for electrifying everything, and we're not alone in this, which means that the entire Western grid and other states that have these requirements are going to further increase their electricity demand because of those EVs and charging stations. I know for a long time electricity usage had not been on, it kind of been steady in the United States. Do you have any data on electricity demand and how that
Mm.
jives with this push for electrification of all our economy?
Right. So on one level, I mean, I think it's very fair to say that if you're thinking of the perspective of, say, a business who wants to potentially relocate to New Mexico, one of the many elements to your calculus will be, is there energy? Is it reliable? And is it fairly affordable to obtain? And across the country, looking across this, New Mexico doesn't have the most expensive energy by any means. We've been able to keep it relatively affordable here. But to your point about demand and looking at it this way, even if we look at sort of steadiness in demand as brought forth in sort of a New Mexico framework, or whether we're doing it in that capacity, we have right now, I think, our demand for electronic devices, Internet of Things, even though we're making efficiencies in some areas, we're no longer the aspects of what we're running. For instance, our appliances are more efficient than where they were 30 years ago. Our computers are more efficient at energy usage than where they were 30 years ago. And but we have, for instance, a great need for certain things. Data centers is one of them. We will find ourselves increasingly interconnected. Our ability to produce and power sort of an AI driven economy in 50 years from now, who knows, is going to be based upon our availability to power data centers, who themselves are just huge energy sinks in general.
Even Bitcoin mining.
Even Bitcoin mining.
Yeah.
That's a great word. Bitcoin mining. So that's a really interesting one. So actually, that's another thing. So I've written. So I got a couple papers out there on cryptocurrency. If you want to put yourself nicely to sleep at some point in the future. But cryptocurrency usage is a good example of a technology that became very popular. People wanted to mine Bitcoin, so they set up mining rigs. Mining rigs generate a lot of power, and as a consequence for currencies like Bitcoin, you saw power consumption rise drastically in a lot of different ways, and to such a level that you have to ask, is this power generation generating economic growth? Is it doing anything good? And it's just wasted energy for a lot of people. On the other side of it, though, I think we are shifting away from that. The new cryptography and cryptocurrency solutions use much less energy. They aren't that brute force mining. Proof of work scenarios. You're looking more towards proof of stake, other options that basically allow people to do what they have to do in cryptocurrency in simple terms without demonstrating or solving these really complex algorithms, which take a great deal of energy. So there's all that side of it. But then you've also need, so we have a lot of energy demand in the future. Energy demand itself is likely going to rise, if only due to technological advancements and in our very data-driven economy. So how do you meet that technology? How do you meet that demand? It's going to be based on resources. It's going to be based on renewables, and it's going to be based on things that people don't necessarily like to talk about. One thing that's looking at other things that's carbon free but not considered renewable would be something like nuclear energy. That's another one as well. Here in New Mexico, of course, here and everywhere, it's a very divisive topic for a lot of people. But when safety is paramount, it's able to produce a large amount of clean energy for a very low marginal cost, even though the cost of building a new plant is significantly expensive. So all of these energy sources are on the table, and they all have to be considered realistically going forward, because the expectation shouldn't be that our energy is going to decline. In fact, I think with economic growth, productivity, data centered economic growth in particular, well, we're going to see greater demand on our power supply. And, we should not be, another way to think of it is, we should be able to produce power cleanly and efficiently, but also reliably. And that is sort of that's a goal.
Right, right. Well, just to talk about the overall demand, I'll provide the information I have. So I
Yes.
went on the Energy Information Administration's website, and between 1950, where they go back to, and the early 2000s, electricity demand in the United States was more or less a straight line upward in terms of demand over time.
Yes.
It did level off for a little while in the 2000s here, but shows signs of ramping up uh,
Mm.
in recent years. I think as some of these new technologies, whether it's Bitcoin mining or Teslas, require additional electricity. All right. Well, you mentioned nuclear, and as a finance guy, that's one of the big problems with nuclear is just building a large nuclear facility. But of course, there's also this kind of, you wonder if it's really going to happen. The modular nuclear reactors out there that seem like they have a much better economic
Mm.
profile. You don't have to come up with so much capital immediately, but nuclear is certainly something that I believe should be a solution. Nuclear is kind of the ultimate made in New Mexico technology for both war making and for civilian power, not in the plant side of things. But uh, it would seem that that is an issue. Is it purely political that you see it, or what
Mm.
about the financial aspects of moving towards nuclear?
Oh, that's right. So I really appreciate that. So, looking at some data on this as well, it is very expensive, as you point out, Paul, to build a nuclear plant. But the marginal cost of generating electricity, if you're able to maintain that plant over a long time, so basically, if you've already built the plant and it's already continued going, is actually not that high. It's actually one of our lower energy production costs. But to your point, it's political for all the reasons that go within it. There's, people look at this and say, what represents a fair risk for society? They say, is it, the risk of a nuclear meltdown, even how remote it is, justify the power generation that is created? And it's easy, we can say this at a 30,000 foot view. Well, it's a very safe industry in general. It's a very safe operationally, and then you have, of course, the storage of radioactive waste that's generated from nuclear material as well. And all of this is a big deal, and the environmental costs of that. My personal viewpoint is that, like you, Paul, I think that nuclear should always be on the table in our energy discussions in the future. I think that we are, because it is such a powerful generator of electricity, and fission in its the way that we create it and the way that the resources that we're doing it, it is a safety intensive industry that has advanced substantially since my own grandfather, a nuclear physicist, worked on kind of a failed project on nuclear-powered airplanes back in the 1950s.
Nuclear-powered
Yeah, they
airplanes.
didn't fly, as it turns out. But it was you're thinking about just think at that time, of course, reactors were really big, heavy things. And you
Sure.
can imagine putting them on a plane and he's doing the calculations on this thing. And it's this like spruce goose type of thing. That's this massive, low flying nuclear object that can fly basically forever. But with, it's an, just go outside with your, with a 44 and anyway
Yeah,
but
that's the least of your problems
it's the
at
least
that
of your
point.
problems. And nowadays it's gotten much better. Reactors have gotten smaller, more efficient. Technology has improved, and at this level then there's a lot of technologies that can be used to harness energy in a meaningful way. So I suspect what will happen is if we left it off the table, you could use something like nuclear to supplant renewable especially renewable energy production in off times, to your point. And that's going to be interesting to see because right now, I mean, this is a tendency. It is cheaply done in the long run, and it's a way going forward. And as you point out, energy over the long run has been increasing. But I suspect even though we've gotten some efficiencies down the line, I think it's not going to be going down so meaningfully that we'll build access capacity without thinking very carefully about battery storage, about the costs associated with it. It's a big deal.
Well, there's more that we could certainly address in energy and electricity issues, but we'll have to do that on a subsequent podcast because our time is running out here. And I appreciate your time and information. But if you would like to share where people can follow you, I don't think you're on the X, but if you have a website, probably a smart man there, Reilly, but wherever you can share your work and information, would love to do that.
You're welcome to. Thank you so much. I have a website, ReillyWhite.com. It's just my name, Reillywhite. I'm also on the X, but I don't post a lot. Just Reilly_White on Twitter. And I've got... I feel I have about 2,000 followers, but I feel like they're all bots. So I feel like it's
all right.
One of those.
Well, I probably follow you, and I'm not a bot, but
thanks.
Since you don't post that often,
I don't. Yeah, it's not
It's okay. All right. Thanks for listening to this week's episode. Find all episodes at tippingpointnm.com or at the Rio Grande Foundation's YouTube channel. Subscribe to the show at Apple, Stitcher, or tell Google Home to play Tipping Point New Mexico. Thanks to Path 3 Marketing for producing this show.
Oh, man.
All right, Carol, I know you need to get out of here, but hopefully you've...
I was bummed we didn't talk about the managed funds. I've got like...
the permanent funds,
funds. I've got Alaska data. I've got...